So you might have seen the headlines that the Bank of England cut the base rate last month. Great news, you say. Mortgages are going to be cheaper. Not so fast. Mortgage rates don't just follow the base rate. Let's dig into how they really work. The base rate is what the Bank of England charges other banks for borrowing money. It's basically a benchmark for tracker mortgages and savings rates. But when it comes to fixed rate mortgages, like most of us are on, then the base rate's only part of the story. There's two other really big factors, and that's gilts and swap rates. Gilts are UK government bonds. When gilt yields go up, it means the government's paying more to borrow money, and that pressure filters around into the wider financial system. Now, swap rates, they're what banks use to hedge against future interest rate moves. Think of them as the market's best guess at where interest rates are going to be in 2, 3, 4 and 5 years' time. So if investors feel that inflation's going to stick around, then swap rates are going to go up, even when the base rate's falling. And here's the real twist. When the Bank of England cuts the base rate, it often means that the economy's under strain. And if markets are worried that inflation can flare up again, or if global investors are demanding higher returns, then swap rates and gilts are going to climb. And because lenders get a lot of their funding through these markets, then mortgage rates are going to rise. So what does this really mean for you? Well, obviously if you're on a tracker mortgage, then your rates are going to go up and down with the base rate. But if you're looking for a new fixed rate deal, then it's really the gilt and swap markets that set the tone. And that's why you might not see the cheaper rates you expect shortly after a rate cut. So when you hear on the news that the base rate's down, don't instantly assume that mortgage rates are going to follow. You've always got to look at the bigger picture, and that's gilts, swaps, inflation figures, and the lender's own appetite. I'll be covering the next Bank of England update on September the 18th. So check back in then for the latest breakdown. And if you want tailored advice on what this means for your mortgage, never ask a chicken.